In the heart of the digital age, a revolution was brewing, one that promised to redefine the very fabric of finance and commerce. This revolution was cryptocurrency, a term that had become synonymous with innovation, speculation, and for many, financial freedom. As the world began to embrace the idea of decentralized currency, a myriad of blockchains emerged, each with its unique features, strengths, and weaknesses. In this narrative, we will explore the landscape of cryptocurrency, delve into some of the top blockchains, and discuss strategies for making money today through the buying and selling of crypto. The story begins with Bitcoin, the pioneer of cryptocurrency. Launched in 2009 by an anonymous figure known as Satoshi Nakamoto, Bitcoin introduced the concept of a decentralized digital currency that operated on a technology called blockchain. At its core, a blockchain is a distributed ledger that records transactions across many computers, ensuring transparency and security. Bitcoin's success laid the groundwork for thousands of other cryptocurrencies, each vying for a piece of the burgeoning market. As Bitcoin gained traction, it became evident that it was not just a digital currency, but also a store of value, often referred to as digital gold. Investors flocked to Bitcoin, driven by the hope of capitalizing on its price volatility. The allure of quick profits attracted both seasoned traders and newcomers, sparking a frenzy of buying and selling. However, Bitcoin was not without its challenges. Scalability issues and transaction fees became prominent as the network grew, leading to the rise of alternative blockchains. Among these alternatives, Ethereum emerged as a game-changer. Launched in 2015 by Vitalik Buterin and a team of developers, Ethereum introduced the concept of smart contracts, self-executing contracts with the terms of the agreement directly written into code. This innovation transformed Ethereum into a platform for decentralized applications, dApps, and decentralized finance, DeFi. As developers flocked to build on Ethereum, its native currency, Ether, skyrocketed in value, creating immense opportunities for investors. The Ethereum blockchain became a fertile ground for innovation, leading to the creation of thousands of tokens and projects. However, Ethereum's rise was not without its own set of challenges. High gas fees and network congestion became significant hurdles, prompting the search for more scalable alternatives. This quest led to the emergence of blockchains like Binance Smart Chain, BSC, Solana, and Cardano. Each of these platforms sought to address Ethereum's limitations while offering their unique features. Binance Smart Chain, launched by the cryptocurrency exchange Binance, quickly gained popularity due to its low transaction fees and fast confirmation times. It became a haven for DeFi projects, allowing users to trade, lend, and borrow with ease. The allure of BSC was its ecosystem, which thrived on user engagement and community-driven projects. Investors found themselves navigating a landscape filled with opportunities, but with these opportunities came risks, as many projects were not vetted thoroughly. Solana, on the other hand, positioned itself as a high-performance blockchain designed for scalability. Its unique consensus mechanism, called proof of history, enabled it to process thousands of transactions per second, making it an attractive option for developers and investors alike. As the Solana ecosystem flourished, it attracted significant attention from venture capitalists and institutional investors, further driving up its native token, SOL. The speed and efficiency of Solana opened the doors for a new wave of applications, including non-fungible tokens, NFTs, and gaming platforms. Cardano took a more academic approach to blockchain development, emphasizing a research-driven methodology. Founded by Charles Hoskinson, one of Ethereum's co-founders, Cardano aimed to create a more secure and scalable blockchain through its layered architecture. Its native token, ADA, captured the interest of investors who were drawn to its long-term vision and potential for real-world applications. As Cardano continued to develop its smart contract capabilities, investors watched closely, hoping for a resurgence in its price. With the rise of these blockchains, the question on the minds of many investors was how to navigate this complex landscape and make money through buying and selling crypto. The first strategy that emerged was the age-old principle of buy low, sell high. This fundamental approach required investors to identify undervalued assets and capitalize on price fluctuations. However, in the volatile world of cryptocurrency, timing was everything. Investors needed to stay informed about market trends, news, and developments that could impact the prices of their holdings. Technical analysis became a crucial tool for traders looking to make informed decisions. By studying price charts, patterns, and indicators, investors could gain insights into potential price movements. Many turned to social media platforms and online forums to share their analyses and predictions, creating a community of traders who relied on each other's insights. However, this approach was not without its pitfalls. The fast-paced nature of the market meant that information could quickly become outdated, leading to hasty decisions and potential losses. Another strategy that gained popularity was dollar-cost averaging, DCA. This approach involved investing a fixed amount of money into a particular cryptocurrency at regular intervals, regardless of its price. By doing so, investors could mitigate the impact of market volatility and reduce the risk of making poor investment decisions based on short-term price fluctuations. DCA allowed investors to build their positions gradually, fostering a sense of discipline and patience in a market known for its unpredictability. As the cryptocurrency market matured, the concept of yield farming and staking emerged as attractive strategies for generating passive income. Yield farming involved lending or staking cryptocurrencies to earn interest or rewards, often in the form of additional tokens. This practice became particularly popular within the DeFi space, where users could provide liquidity to decentralized exchanges and earn fees in return. Staking, on the other hand, required investors to lock up their tokens in a network to support its operations, earning rewards in the process. Both strategies offered enticing opportunities for investors seeking to maximize their returns. The rise of NFTs also presented new avenues for profit. Non-fungible tokens, unique digital assets representing ownership of a specific item or piece of content, captured the imagination of artists, collectors, and investors alike. The NFT market exploded, with high-profile sales fetching millions of dollars. Investors began to explore the potential of acquiring and trading NFTs, with some even creating their own digital art to sell on various marketplaces. The NFT craze demonstrated the power of community and creativity in the cryptocurrency space, as individuals sought to express their identities and values through digital ownership. However, as with any investment, the cryptocurrency market was not without its risks. Scams, hacks, and regulatory challenges loomed over the landscape, serving as reminders of the importance of due diligence. Investors learned to be cautious, conducting thorough research before committing their funds to any project. The rise of decentralized exchanges, DEXs, allowed users to trade directly without intermediaries, but it also meant that investors had to be vigilant about the security of their assets. The importance of using hardware wallets and employing best practices for safeguarding private keys became paramount. As the narrative of cryptocurrency unfolded, it became clear that the landscape was constantly evolving. New projects emerged daily, each promising to disrupt traditional industries and provide innovative solutions. The allure of quick profits often clouded judgment, leading some investors to chase after the latest trends without fully understanding the underlying technology. Education became a key component of success in the cryptocurrency space, as investors sought to equip themselves with the knowledge needed to navigate the complexities of blockchain technology and market dynamics. In this ever-changing environment, the concept of community took on new significance. Many successful projects thrived on the strength of their communities, fostering engagement and collaboration among investors, developers, and enthusiasts. Social media platforms became breeding grounds for discussions, ideas, and collaborations, allowing individuals to connect and share their experiences. The spirit of decentralization extended beyond technology, creating a sense of belonging among those who believed in the potential of cryptocurrency to reshape the world. As the narrative of cryptocurrency continued to unfold, it became evident that the journey was not just about financial gain. It was about empowerment, innovation, and the pursuit of a more inclusive financial system. The top blockchains, Bitcoin, Ethereum, Binance Smart Chain, Solana, and Cardano, each played a vital role in shaping the future of finance. Investors found themselves at the intersection of technology and opportunity, navigating a landscape filled with potential rewards and inherent risks. In conclusion, the world of cryptocurrency is a dynamic and multifaceted narrative, one that invites exploration and engagement. The top blockchains provide a diverse array of opportunities for investors looking to make money through buying and selling crypto. By employing strategies such as technical analysis, dollar cost averaging, yield farming, and staying informed about market trends, individuals can navigate this exciting landscape. However, success in cryptocurrency requires more than just financial acumen. It demands a commitment to education, community engagement, and a willingness to embrace the uncertainties of a rapidly evolving market. As the story of cryptocurrency continues to unfold, it beckons those willing to embark on a journey of discovery and innovation, promising a future where the possibilities are as limitless as the technology itself.